We're here in London with Sandeep Jaitly, a gentleman who is involved in the banking industry in London. And I met Sandeep last month in Hungary. And he delivered an amazing paper on trading the basis in gold and silver, which is one of the favorite topics of Professor Fekete. And I was most impressed with him. And he had sent me earlier a series of papers on banking and finance, which again impressed me. And so I thought I would take the opportunity of being here in his turf to ask him a few questions about paper money, the banking industry, and where he thinks this is all headed. So, Sandy.
Thanks, Darryl. Well, I think it certainly has been a very interesting period in the past couple of years. Just how interesting, I don't think people fully grasp, which is the important thing.
Sure.
What's been going on hasn't happened in the history of finance, full stop.
Yes.
Since banking was invented in Italy.
Sure. Invented, right word.
You know.
Yes.
This has been so unprecedented in terms of asset price changes which aren't obviously visible to the human eye as
Sure.
well, which are slightly beyond perception. These changes have been so gargantuan that explanation has not really
Sure.
been there.
Well, because the questions haven't been raised.
Yeah.
So no question, no explanation, no observation, and yet they're there. And that's why we were all basically in Hungary, talking about the tectonic shifts that are going on underneath the visibility of even the crisis that we're seeing now. Sandeep, what do you think at this point, which is the spring of 2009, we've seen the fall of investment banking, all right, which was, pretty much best positioned to take advantage of what they had created. That's why they were there, all right? And they are in disarray, okay? We are seeing Main Street itself, the economy, what they call the real economy, the real economy based on a false paper.
Yeah.
All right.
Yeah.
But it is. It's what it is a real economy, and it is based on false credit,
Yes.
false paper.
Yes.
But it's there,
Yeah.
and we're seeing it starting to buckle. Okay, for a number of reasons. The idea that they've lost so much valuation in stocks and in the real estate. The fact that as the economy has started to lose steam, unemployment is rising, the safety nets are being pressured. All right, and there seems to be also a general feeling of what would I put of consternation, which came from not seeing it. All right, so the very suddenness has affected these people with a fear of where it might all be headed. In your opinion, Sanjeev, where might it be headed?
It's very difficult to see the interaction between the financial markets and the real economy. Now, when you try and consider them as two separate entities, that's where the problems first begin, because the way that money and credit have evolved since the mid-17th century has been on a completely unexpected trajectory. The thing about using gold as money is that you can't destroy gold. If you have an ounce of gold, you have an ounce of gold. You can't, if you spend it, that's another matter, but someone else will have its positive capital,
Yes.
as it were.
Yes.
Now, when money evolves beyond that into bits of paper, as it were, that have been created out of nowhere, you come to the problem that credit and that Krugerrand coin, as it were, that solid coin, become asymptotically similar, as we say as mathematicians. They become the same.
Yes.
Now,
but they are not.
But they are not.
Okay.
Now, the point about it is that they are the same in the respect that if I am a banker in the sense of a clearing banker and I own a particular security, then I can sell it or securitize it with the same ease as I can get the money in the first place. Now, obviously that is fine until it's not fine. You know?
That's right.
And when it's not fine, when you've built it up to such a degree in the system that you only need that grain of sand, as it were, to
Sure.
drop and the whole thing collapses,
Yes.
it's very hard to predict what that's going to be.
Okay.
But ultimately, as is always the case, it's because the bid of a particular market just falls away.
Yes.
Now, when it falls away, the cascading nature of it is that securitization stops, and effectively credit can no longer be securitized. If you own credit as an asset, you cannot securitize it.
Sure.
And the money literally just disappears, you know. It was never there in the first place.
Absolutely.
You know, but the point is, though, it disappears there and then.
Sure.
Now, the real economy, some might argue leads, some might argue lags the financial markets. The real economy always lags the financial markets. The financial markets will always anticipate well in advance a bottom in the real economy.
Okay.
Now, the real economy is affected from movements in the financial markets because nominal demand is effectively a function of credit. Now, whether it's whether you want to take on additional credit or whether you want to refinance your existing debt holdings, you know, that's the interaction that means that they are not distinct entities, the financial market and the real economy. So where we go from here is a matter of debate, but if you instigate the right background for a financial market boom, a boom in nominal asset prices, then its trickle-down effect into the real economy can be mistaken for sort of, you know, many other
real
things.
recovery.
A real
Recovery.
A real recovery.
This is akin to Mises' theory of the crack-up boom.
Mm-hmm.
When you've got so much credit in the system attempts to resuscitate itself, it attempts to reflate
Mm-hmm.
its way out of problems caused by inflation in the first place,
Mm-hmm.
and instigates an apparent recovery, which we may be on the verge of now.
Mm.
We don't know.
Yeah.
I mean,
You don't know.
You don't know.
Yeah.
You know, as with most issues, there are people, you know, taking each side of the table,
Mm.
and who's right isn't dependent on the number of people.
Mm-hmm.
So this is a fascinating time in history. In your opinion, Sandeep, and looking at the markets, and that we've come so far, 3 centuries
Mm.
on paper.
Mm.
You know, people here have, you know, I mean, I'm American, and even to realize that when I was a kid, we had silver coins.
Mm-hmm.
It was during the 60s that they took the silver out of the coins.
Mm-hmm.
And I was no more aware that there was silver in them before
Mm.
than most people are aware now that there never was silver in them.
Yeah.
Okay?
Mm.
Or they're not even silver.
Mm.
And so when you have such a degree of basic ignorance about what money is,
Mm.
you can do many things with that ignorance.
Mm.
All right?
Mm.
Until you reach that critical point, that grain of sand,
Mm.
or the metaphor that sprang to my mind is that we were all walking on water till someone broke the surface tension.
Yeah.
And
Yeah.
holy smokes, and we've forgotten how to swim.
Mm.
Okay, because the quote miracle of paper money has gone on for so long. Because gold was essentially removed over those centuries. I mean, in the beginning, they said that the paper money had the complete backing of gold or silver. They always say that.
Mm.
I've looked at the history of money in China, and they always started out saying, this is convertible, this is backed by something. You know, in France they backed it by land, in other places they tried to back it by China, they even tried to back it by silk at one point. But they knew that on the face of it, paper money looks so much like a fraud that people go, well, there's nothing here. If there's no promise and there's nothing, what good is it?
Mm.
And in the last 300 years, we've gone from an alleged complete backing of a paper currency by gold or silver to a backing whereby people like you and I couldn't couldn't get the backing unless we're governments. And that ended only as late as the 1970s, when the United States broke down in, at the Bretton Woods Agreement, their obligations. And now, for the first time in history, the whole globe is on paper. It's never been this way before.
No.
I think this is truly new, okay?
Yeah.
But for the first time in human history, we're walking on paper money, okay? That's vulnerable. That there's nothing backing it up except these valuations that can just disappear in a moment. But the memory of gold still is there. We intellectually and academically, we know the role it played. But as we've gone so far away from it, it's like the heroin addict that no longer knows what it was like to wake up without needing heroin. That cannot conceive of being happy without a slight buzz or a slight lift from it. Do you think that it's possible, or do you think out of choice or perhaps even necessity that there may be a return to some sort of gold component of the monetary system?
I think whether it's done by the governments themselves or by the people themselves is a very fine point, which will be hard to differentiate from. Fiat currency will always have a place in the world because you can use it in settlement of tax at the end of the day. Now, the point is that, two side markets could develop where, gold is effectively used as currency, but because of the ignorance of government, they don't want to return to a gold standard. You constantly pay your taxes in, barrel loads of dollar bills. As it were.
I would rather pay anything in paper rather than gold. I would rather receive gold and pay in paper.
Exactly. So let's just say that if nothing was done, that would be the likely evolution in the market. So that's one eventual, let's say, solution to the problem. The other solution to the problem would be to return to the full real bills and gold standard concurrently, naturally. Now, I think that is far too erudite, for governments to take up on their own. It's a forgotten philosophy as far as they're concerned. So that's one alternative.
But the market could return there naturally.
The market
stability
could return there naturally. Now, these two are effectively the same. I didn't sort of elaborate on that, but they will effectively be the same thing. So you will have a parallel market for real bills and gold. The point about it is that there isn't a need to hold real bills as assets. Interest earning assets are needed by the community at large. Now, the game will eventually be realised that owning treasuries payable in fiat currency by the time of expiry is a pretty silly thing to do. But the need will still be there to own interest-earning securities. Real bills will spontaneously evolve, as Professor Fekete has told us. They will naturally arise. So, you will have real bills naturally. You will have the acceptance of liabilities only being settled in gold naturally, implicitly. You can only trust gold. And you will have the payment system for taxes sort of still being, fiat in nature. It's effectively the same thing. Exactly. So it will happen eventually. You cannot print money indefinitely and expect treasury yields to stay down indefinitely. You have a huge derivatives market out there, which is sort of acting as a cap on where treasury yields actually should be. And that means that the game can go on for a lot longer than people would naturally discount.
That's true. That's very, very good. That's one of the things that's I've always sort of seen this, is that when you have people like Professor Fekete and John Exter, the central banker, people who looked at the monetary system much as structural engineers look at a bridge, and when they see a fault,
Mm.
and when they see a fissure developing, you know, because of too much pressure or something like that, and it's not just people like that. When the rest of us begin to see it too, we become fixated on, look at that break. It's going to give, it's going to give, it's going to give, it's gonna give. And I've noticed that when people finally understand how problematical the world of paper money is, then the next thought is, oh my God, it's going to happen tomorrow. Well, tomorrow it doesn't always happen. It's going to happen some tomorrow, all right? And none of us know when. We are at this critical point. The end game is in sight, but there's a lot of mist.
Yeah.
Right? There's a lot of mist. Okay, and we, you know, my feeling is that we're not sure how it's going to play out, but we are going to get there someday. You know, and I really want to thank you for. You know, giving us the benefit of your erudition and your insight. And I mean, one of the joys of going over to Hungary and listening to Professor lecture are the kind of people that he's attracted. And you're certainly one of them. Thank you very much.
Thank you, Darryl.
Great.